Are we in a situation where we get a second round of inflation? We have a Fed that doesn't want to go back to ZERP. They don't want to go back to zero interest rate policy. They think it's completely ridiculous to do that now. I think it's ridiculous to go back to it. I think it's ridiculous to go back to QE. I think the Fed funds rate is going to stick somewhere around 3%, two and three quarters, three and a quarter over the next 7 years. So if you're waiting for the market to give you a 2% or a 1.5% Fed funds rate, I think you're going to be waiting a really long time. What we're dealing with right now is the complete uncertainty of the projected path going forward. And it goes more to, can you filter out the negativity that we're seeing in society, right? Because we're so fractured as a society. You're either red or blue. You're an inflationista or you're a depressionary. You're market crash or all-time highs. You're Bitcoin maxi or you're, GameStop motherfucker. It's we've compartmentalized so many things, but you really just need a broad-based experience education to say this market isn't like any other market. It's not 1929. It's not 1987. It's not 2000. It's not 2008. It's not COVID. This is a new regime, a new marketplace. And so for me, that's why I really like the standard deviations and the mean reversion thoughts, because I can check my perspective against my emotions. And you've got to be able to manage your emotions, right? And we're fortunate, right? I mean, we're little guys trading our own accounts. We can be in the market, we can be out of the market, we can be quick, we can be nimble. We don't have to be married to anything. We don't have to manage other people's money. We don't have to say, okay, I've got 6 billion under ALM and I've got to hedge this risk for that, for these little old retirees in Dubuque, Iowa. You know what I mean? I don't have to be perfect on a macro level. I just have to figure out what I think is going to be the next short-term trend and how do I get on board? And then how do I avoid losing money? So the old arguments of old term premium, the old arguments of it's 1978, the old arguments of it's the 90s, none of it's applicable in its totality. You can take pieces from it and you can try to build a picture of what's going to happen going forward. And then you look at what's actually happening in the underlying stock market right now. We've got really good buybacks. We've got strong underlying earnings. Yes, our multiples are high, but we've got inflows on passive basis. So we got buybacks and passive. That's a net positive, right? We've got decent earnings. We've got decent outlook. Inflation is trending down. Why would you not be involved on the long side with some protection opportunities if the market decides to shift? And then if you look at it on a longer time frame and you go to mean reversion on a standard deviation, you'll pretty much see where you might want to buy a put, or you might see where you might want to take a flyer on a new long or a new call. And I think we're on a quarterly, on a 2-month basis, standard deviations channels of 2 to -2, 1, and 0 are working really, really, really well for showing you when you shouldn't overreact, when you should consider adding or lessening a position. And then you've just got to avoid the Twitter noise, right? The live feed noise, and cycle down into the people that you can have some confidence with. And then you got to go touch some grass and breathe and go for a run or go for a workout or go have a meal or come to Tonality and have a beer and kind of just like say, okay, that's enough me thinking too intently today. But what I see people digging in and taking these huge mental levels where they want to be right. You didn't know they're right. And we know that doesn't really happen that often, right? We're just, surfing. We're just surfing markets and trying not to get our asses kicked.